Happy Tuesday, traders. It is 8:01 a.m. Chicago time on the 20th of August, 2019. Thanks for joining me today. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode 1578. Good morning, bonjour, guten Tag, meine Damen und Herren. Salam alaikum, shalom, and all that good stuff. um, Looking at the markets this morning is kind of an interesting environment. The underlying tone of the market is really slightly risk off, although really the situation is mixed. Yesterday um, we closed the S&P minis right on top of the open. We had a perfect doji type of setup yesterday. The open and the close were exactly the same price, but the delta was a lot weaker. I'm expecting that it is the high and the low of yesterday really mark out a potential breakout point coming into today. This being 29.32.25. Yesterday, I was expecting a test of 29.34.35. And then below 29.13, the range and the volume was a lot tighter than expected. And also, there's the volume was off quite a bit until near the close. We were running about somewhere around 35-40% off on volume. But what we established yesterday in the ES, and I'll go over this in a minute, probably not the appropriate time to get into this much detail, but really, really interesting. This is the kind of situation that lends itself to a potential break one way or the other. So you want to pay attention today to yesterday's action, and this goes for the Russell, the Nasdaq, and so on, the Dow. But looking at the overall market sentiment, we do have the bonds higher today at 28 ticks. Um, The futures are trading at 165.5. Very interesting. The Bund is up 92 ticks, trading at 179.07. Wow, at 0.5% up. The Japanese yen is up. The U.S. Treasury note is the 10-year note is up 11.5 ticks, and gold is up at 1,513, as well as the dollar. So what we have is all the safety assets all kind of clustered on the positive side. The negative side, the DAX is the weakest link today, down 39 points, which is just 0.32%. So nothing dramatic in either direction, but the market is leaning towards safety this morning overall. That's the sentiment coming into the overnight session. Looking at what we're expecting for today, there isn't much on the calendar today. We did get some numbers out of Europe. German PPI month on month came in stronger than expected at 0.1 versus 0. Construction output came in at 1%, priors 1.7. And then really looking ahead, there's nothing but the API crude stocks after the close. That comes out of 4:30 Eastern. There's no consensus on that. The prior is a draw of 2.19 million. And then we have Fed's quarrels at 6 p.m. Tomorrow, though, is quite important. Tomorrow we get the FOMC minutes at 1 Central, 2 Eastern, and the market is going to be paying very particular attention to this. There are some really historic and interesting facts that are impacting the market on a macro level. So I'm paying very, very particular attention to macro analysts and how, generally I found that macro analysts are generally bearish equities because of the debt load and things like that, although that has not played out very well for that mindset. But just understanding the mechanics and the reasons behind the Fed cut has really opened my eyes in terms of the dollar crunch that's going on, and forcing the Fed to actually cut rates and provide liquidity and potentially get into QE. But what we're looking at, just so you know, what we're looking at for for Q4 probably this year is that we are likely to see some action like we did last year into November, December. There are a lot of pieces that are coming into play. The podcast that I really have become very loyal to and listen to very carefully is called Macro Voices by Eric Townsend. I really suggest that folks find it on iTunes or whatever your podcasting app is and subscribe to it. It's free. Amazing guests, many different perspectives. You end up making your own mind about what you think, but it pulls me out of the day-to-day intraday trading and into why gold is up $200 over 2 months and things like that. These are very, very big moves that are happening in these macro products, so pay attention there. Anyway, so not much there. Let's take a look at what we expected yesterday. Yesterday, we were gapping up. The primary expectation uh, uh, is a pullback, is a potential pullback to 29.13. 29.09 was the gap mid from the open. Expected a push down to 29.13, where the singles from last Tuesday, the news day would be in play. And then I expected an impulse up and a turn higher, and I was expecting 29.34 and potentially 29.40 as key test areas. Now I think I was very optimistic with my expectations here from 13 to about 40, with 34, 35 being a key area. The best we could do yesterday is a pullback down to 15.50. Here it is, a pullback to 1550, and it could only get to 2932. So pretty tight range, pretty low volume, relatively low volume compared to prior days. 904 versus about 115, 113, 1.13, 1.15. But we are smack dab. Look at what we did. We are right in the acceptance area of that news day last week that caused this massive push up, a 60-point push up last Tuesday. We basically built our value area right on top of the existing value area, our point of control inside of the value area. So we were in balance with last Tuesday. The initial test in the morning was on top of the point of control, the naked point of control from this day to the tick at 28.50, and then we ended up pushing to 32.50, which happened to be the naked close to the tick as well. So very orderly trade yesterday. We ended up extending the IB higher. So we ended up playing out. We saw scenario one play out with much tighter ranges, unable to really get into 35 and above. And then the overnight session, look at what the overnight session did. This is the overnight high. This is the overnight low. I have those plotted on my day session, RTH session. And we basically stopped right at the overnight high. The overnight high stopped right at yesterday's high. The overnight low right on top of yesterday's low by 2 ticks. And what this is setting us up to do is this is setting up a breakout situation in that we gapped and balanced. Balance is likely to lead to imbalance, and we have a void underneath us. This is a gap zone underneath us. This is likely to trickle down to 29.05 initially, which is the gap zone mid, and then potentially down into 28.95, which is another 10 points below that. So we have a 20-point gap here. And if we start to push below 1550, what I did just out of interest here, What I did is I was monitoring in the overnight session since I sat at my desk. I'm monitoring this zipper. I put a box around, as you can see here. I'm monitoring this zipper as a potential area that the market might hold, and anything below that, my expectations. So you can see this clean and clear zipper on Bookmap right inside of the stock zone, putting us out of yesterday's value. And my expectations, if this zipper is going to hold, then we are likely going to find ourselves back at the overnight point of control at 26. If it doesn't, I expected a precipitous or a very quick drop into 29.1775 liquidity down here, and that's exactly what's happening. Look at the volume, the delta as it drops, and look at how it drops much more aggressively right as we break through this last kind of area of support on the action overnight. So this zipper was kind of like the last area to hold us back before we look at the lows. We have some liquidity at 1775. I expect that to go, and I'm looking for the market to actually push through the low here. I know I have a bearish tone, but look, the underlying, the overall market sentiment that I always talk about right at the beginning is actually risk off with a situation where we have a very, very clear boundary set by yesterday's action in terms of these levels here on a balanced day that's inside of this news day. This is kind of a unique situation that gives us a pretty good idea of what the market is likely to do, that if it drops, it's likely to push a fair amount. So just that's what's setting up there. We just took out that liquidity. This liquidity that's been here all night, we just took that out at 1775. So this is a high probability extension of the overnight low and a high probability drop through 1550. So we'll see how that works out. That's happening in real time. We're seeing the action as it happens. Let's take a look at, so we looked at the day session. Let's take a look at the overnight. Here's what we've got. A fairly balanced overnight session on top of yesterday's action. And wait a minute, why is this profile showing a value area? That's kind of interesting. Showing the whole range of the value area here. We got to look at this. So we are. So you could see that today's profile, whoop, is basically the same as yesterday's day session profile. Whoop, same thing. Okay, we tried higher, we tried lower early. There it is. We tried lower early during the day session yesterday, and then we pushed to high, same price, and then now yesterday we kind of ran out of time here, and we ended up closing on the open. But this morning we still have a little bit of time to push through. And it is pushing through. So what this morning is doing is it's duplicating the overnight session, is duplicating yesterday's day session, and it's likely to find its way lower, lower into the 2905, as I said, 2900, and then 2895 as the next key areas. That's what we see overnight. The volume is pretty good in the overnight session, 262,000, pretty active session there. Let's take a look at what we're expecting for today. I was going to do a trade wisdom, a quick trade wisdom session today. Just a topic that we were discussing at Convergent Trading in our accountability channel in terms of edge versus execution and so on. But we're not going to have time for that today. Here's what we're looking for today. Let me turn on my stock zones. By the way, you can see that that gap zone right in here. Gap zone overlaps the century figure, the gap mid at 2905. Just remember those areas. So this morning, the expectation is an open that is likely to drop right through Originally, my expectation is it was up here somewhere when I first started preparing this morning, and it's already dropped. My expectation is it would push into the overnight point of control, and then push this low, and then start working itself down into 2905, consolidate, pull back, and then ultimately continue to drift down into 2900. That's potentially still the play, although it's already, the market's trading right here. It's already kind of on its way. I did expect a little bit of a reversion back. The overnight inventory is really balanced. It's traded both sides. It's kind of like I said, the market's just followed what was there. The secondary scenario is an open that pushes down below, finds its footing, consolidates, impulses back up, and squeezes into the overnight point of control for the ON VPOC stat, and then starts to and really catches the bears off balance here, and then starts to squeeze into that 35 and then potentially into the 40. It is Tuesday. We're expecting an expansion of the range. Mondays are really the worst day of the week in terms of range and opportunity, along with Friday. Tuesday we generally expand the range, and that's a statistical study that we looked at, that I pay attention to. How does the range play out? What are the ranges and how do they play out given the day of the week? Pretty good study to get done, actually, if you know how to use Excel, or if you have some way to backtest. So those are the two main ideas. My primary inclination is to look for areas to sell. If the market opens, let's redraw this scenario one to where it is. If scenario one opens and starts to shift up, I'm going to be looking to sell this area initially. I'm going to look for the low as the initial target, and then 2905 as the secondary, and then the extended target will be 2895, with 2900 being an obstacle in the way. But that's the primary idea for today, given how the market is set up, is to push the short side and go light the longs. I'll stop going light the longs once we push above the yesterday's point of control and the overnight point of control. Then I'll start to get aggressive with longs, looking for 35 and 40. All right. So hopefully that's not too confusing. I'll show you Bookmap again. Those are the two scenarios. I'll show you Bookmap again. Again, you can get this software. I think there's a 14-day trial using go to ctbookmap.pro. But here we broke through this last kind of resort in terms of support, and we are pushing through. It's put in lower highs on every test in the overnight session, and it made this, what makes me fairly confident to the short side is it finally broke this last high on a price action push, and it just immediately exploded down with Delta helping it out. So to me, with it falling through that support area that I'm boxing out on Bookmap here, to me, it just seems like the easier flow, the easier way to go is to the short side. We've just broken through this liquidity here, and the next liquidity zone, as you can see, is down here at 14. Not much stable liquidity up above until you get above 35 or so. And I'm looking for the market to kind of start working its way through this gap zone marked in here down to 2905. Okay. Good luck today. I'll catch you tomorrow. Take care.